Thinking about a reverse mortgage? Before you tap into your home's equity, here's what you need to know and what lenders don't always tell you. Reverse mortgages can be a very beneficial tool, but they are not a one-size-fits-all solution. Here's a breakdown of how they work and who they are really for. Number one, and the biggest misconception of a reverse mortgage, is you actually keep the home. The bank does not own your home when you get a reverse mortgage. You don't give up ownership, you remain on the deed of the home. That home is for you to do whatever you wish to do, but if you do sell the property or refinance, the reverse mortgage will need to be paid back. With ownership comes responsibility. What this means is when you pass away, your home will be deeded and given to your heirs. Your heirs at that point will have the choice to either sell the property and take whatever's left out of the equity, or they can refinance out of the reverse mortgage and pay back whatever is due. Number two, and one of the most beneficial things of a reverse mortgage, you do not have a monthly payment. Not having a monthly payment is one of the most beneficial aspects in retirement for a reverse mortgage. This gives the homeowner freedom to take that money and go see family, or to enjoy retirement, or to utilize their equity that they receive out of the property to upgrade the home, or to go on vacation, to pay off debt, really whatever is needed, without having to worry about making a monthly payment each month and tapping into their social security or pension, retirement, whatever it may be. Number three, there is an age limit to these. You have to be 62 and older. Now, there are programs that allow you to take advantage of a reverse mortgage at 55 and older, but you have to be working with a certain lender or broker that has access to these programs. And remember, the older you are, the more you can actually borrow from your reverse mortgage. The reverse mortgage has calculations based on life expectancy. The amount of equity will increase the older you are at the point of receiving that reverse mortgage. Number four, big one here, equity matters. In order to get a reverse mortgage, you have to have significant equity in the house. This right here is why I see so many retirees taking advantage of reverse mortgages nowadays, because they've owned their property for a long time. They have significant equity in the property based on the booming that we've had over the last 5, even 10 years. Their property has skyrocketed. In order to take advantage of a reverse mortgage, you either have to own the property free and clear or have significant equity. And when I say significant, depending on your age, it can be 60% more in equity in order to utilize a reverse mortgage. Contact your lender or me, and we can run the numbers to see if you have enough equity in the property to take advantage of a reverse mortgage. Number five, and I've already kind of mentioned this already, the reverse mortgage does have to be repaid. Whether that's upon passing or if you sell or refinance, the balance that is due accrues backwards on a reverse mortgage. That means the interest that is accruing over time is tacking on to what you owe on the property, and that will have to come due upon passing, upon selling, upon refinancing. And a lot of the times, if it's upon passing, your heirs are going to be responsible, and they have a 12-month period to deal with the property and pay back that reverse mortgage upon your passing. Number six, there are fees associated to reverse mortgages. Reverse mortgages are very complex mortgage programs, and that in and of itself means that you're going to have larger fees. Sometimes fees can range anywhere from 4 to 6% depending on the balance that is being given to you on the reverse mortgage. And there's not an actual loan amount being given. There's a principal amount or a principal limit that is being given. And so the reverse mortgage is going to have certain percentages of closing costs depending on the actual property. In addition to this, a lot of reverse mortgages are FHA programs. What that means is you're going to have a mortgage insurance premium on top of it, and the mortgage insurance premium can be quite substantial when getting a reverse mortgage because it's an FHA regulated mortgage loan. Again, contact your lender or myself today to take a look at what the closing costs might be on a reverse mortgage when you go to get them. The reverse mortgage may not be an option or something that you want to look at because the fees are going to be more than a traditional mortgage. But again, on the flip side, you don't have to make a monthly mortgage payment. Remember that as you're going through the process. Number seven, and I like to reiterate this, is your heirs will be affected because of this property. That means that upon your passing, again, they have to deal with the property itself, whether it's selling, refinancing, taking control of that property, and they're going to have limited equity at that point to take advantage of. So if your heirs right now are expecting to receive all the equity in your property, reverse mortgage may not be the best option for you. As I go through these options with my clients, I like to make sure we bring in the family and talk through expectations laid later down the road. Make sure your heirs are on board with this, or you understand the limitations and the risks of a reverse mortgage. Again, reverse mortgages can be a very powerful tool. May not be for some, but they are for a lot. If you have questions, please comment below or reach out. Always happy to help. Thank you so much for watching. Please like and subscribe. Help me grow this channel and shed light on the complexity of reverse mortgages and show that they're actually not a bad product. They're just a little bit misunderstood. And again, they're not for everybody, but they are for some. Thanks again for watching. I'll catch you on the next one.